You're listening to an Integrated Wealth Strategies classroom presentation on Viewing Your Retirement Accounts in a New Way. I'm Eric Wickstrom, founder of Integrated Wealth Strategies. Thanks for joining me. The objective of this presentation is to help you understand what your retirement account options are. The federal tax laws allow great flexibility as it relates to retirement account investments, but most people haven't been educated in this area, and hence they don't understand what they could be doing. But just because you can do something doesn't necessarily mean you should. But once you've been educated in this area, hopefully you'll think differently about the retirement plan structures and investments you can make. Now, the Internal Revenue Code, which is created by Congress, is our rule book for these structures. And the great thing is you can utilize almost any type of retirement account for this self-directed process. And even better, at the end of the day, it's your money. So I would highly suggest that you invest in investments and structures that you actually know something about. So what's your strategy as it relates to retirement plan investing? Well, I just hope you're not like our friend Rip Van Winkle, meaning I hope you don't buy mutual funds and sit on them for 20 years and operate under the assumption that they've got to be worth more in 20 years than they are today, because what we've seen recently doesn't indicate that. So get educated about your options, understand what you can do with retirement plans, because there's some incredibly creative things you can do. Understand a few of the basics, for example, the difference between a SEP IRA and a solo 401k if you're self-employed. There's some phenomenal investments out there, even in this marketplace. For example, with banks really tightening up their lending criteria, a lot of IRA investors are picking up the slack and investing with real estate developers and with businesses. You can also use retirement plan as seed capital for businesses or startup business and do this in a tax-free manner. And some 401k plans are even eligible to be opened up to allow for a self-directed option in addition to the mutual fund menu. So take control of your retirement investing. And if Wall Street is confusing to you, or if you don't trust it, you don't have to invest there. There's no law that says you have to invest in Wall Street type investments like stocks, bonds, and mutual funds. But the thing is, don't expect the traditional financial services firms to take time to educate you on your options. They provide great free online information, but that's stuff for products that they can sell you. You need to know what the law allows, and then you can make your own decisions. Otherwise, you'll be investing with the herd, and you'll be getting herd-like returns. So let's look briefly about what you can and cannot put into a retirement account. Now, the Employee Retirement Income Security Act, otherwise known as ERISA, was created 35 years ago, that's right, in 1974, so this is not new law at all. And basically it says there's only two things that an IRA cannot invest in. The first is collectibles, and the second is life insurance. But ironically, a solo 401k can invest in life insurance. So everything else is fair game. So investments like real estate, tax liens, promissory notes, private equity, etc. are totally acceptable. If you wanted to make a loan to your niece so she could buy her first home, you could do that. If you wanted to invest in your neighbor's business, you could do that. And this is all allowed because of the Internal Revenue Code in sections 408 and 401. So what types of retirement accounts can be self-directed and give us the flexibility that we want? Well, fortunately today, all these types of retirement accounts can be self-directed, meaning you can get them out of the stock market and or make other creative investments if you so choose. And because of increased flexibility, a lot of these accounts can be consolidated into basically one or maybe two different types of retirement accounts. But basically, you can self-direct all these types of retirement accounts once you get them in to the proper investment vehicle. So what are you familiar with? Have you always wanted to take your retirement money and go start a business or invest with someone else? Is there a property in your neighborhood that unfortunately didn't get finished that you could pick up for pennies on the dollar? What about a commercial property you're familiar with? You can invest in that. Again, you could co-invest with friends or family for a business or lend that business money. We'll talk here briefly about how you can partner with some friends or family members, form a limited liability company, and go off and buy real estate. And again, on the real estate front, do you travel internationally? Is there a place in Mexico or Europe where you've stayed? You can actually buy that property and put it in your IRA. So why am I a proponent for real estate or other non-traditional asset classes and combining those with your existing stock market investments? Well, the key word here is correlation, and that just means how things move together. So let's take a look at some sample portfolios I constructed, which are made up of stocks, bonds, treasury bills, and real estate. Now, this first portfolio doesn't include any real estate. The second one includes a little bit, 10%, I believe. And the third one's going to include 20% real estate. So what I want to show you, not so much that the investment of choice is real estate, but real estate, by and large, has a very low correlation with traditional stock market type investments. And the key thing is right here, this risk level can go down dramatically from portfolio 1 to portfolio 3 by layering in asset classes that don't correlate very strongly with traditional asset classes like you'll see in the stock market. We talked a minute ago about how you can partner. So here's an example of 3 women who wanted to diversify out of the stock market. So they got together, they put their 3 IRAs together, formed a limited liability company called 3 Girls LLC. Now at this point, they start with $200,000, but they can go off and decide and make investment choices on their own. So let's assume they went and invested in a friend's business or lend him money via a promissory note. They could also invest in real estate they're familiar with and they got a good deal on. They could also buy tax liens. So you see how you can combine your funds with others to perhaps purchase more property or more value than you could have on your own, and at the same time diversifying your IRA investment. So today's takeaway is obviously it's not what you make, it's what you keep. And the reason I'm such a big advocate on retirement plan investing is that our federal government allows you to defer taxes when you make investments in retirement accounts. So you need to take advantage of this great opportunity when you can. So let's recap. I highly recommend that you invest in what you know and what you understand. If you don't know Wall Street, if you don't understand Wall Street, if you don't trust Wall Street, then don't invest there. Invest in your own neighborhood or in your own community. Utilize your connections and knowledge base for your future investments. So if you know of someone who's running a successful business and you know and trust them, see if you can invest in that business with your retirement account. Leveraging knowledge is important, certainly, but don't rely on others for all your retirement investing. I think we saw this firsthand with the Bernie Madoff scandal, and in addition with the problems that Wall Street financial services firms had this last year. Give some serious thought to what your investment process is. Do you have a process, or do you just kind of keep your fingers crossed and hope that it's all going to work out in the end? Start educating yourself about the wonders of self-directed investing. There's been tremendous wealth built in this country by a lot of people who didn't get near the stock market. So there's wealth in just about every place you want to look. And remember, it's your money. I hope you've enjoyed this presentation on viewing your retirement accounts in a new way. You can find us on the web at iwealthstrategies.com. Thanks for listening. I'm Eric Wickstrom, and until next time, here's to a better way of investing.